We're back with another episode of Friday Financial, and we are joined once again by Hillary Nichols, who is our loss mitigation manager here at MHV. Hillary, thank you for coming back on.
Thank you for having me.
Let's talk today about life after bankruptcy. You and I have talked a lot about some warning signs, how to avoid bankruptcy, but the fact it is a reality for folks. So let's talk about, what does somebody do after they file bankruptcy?
Okay, so at the end of every bankruptcy, your goal is to be discharged through your bankruptcy. But not everybody files bankruptcy for the same reasons. You have some consumers who file bankruptcy because of spending problems or poor or improper money management. Then you have other consumers that file bankruptcy because of an unexpected hardship, something that was out of their control. They were laid off, or they took a pay cut. So I think that the actions that you take after bankruptcy they're contingent upon what ended you up filing for bankruptcy to begin with in the first place. So if you are a consumer who filed bankruptcy because of improper money management, we'll call it, then I always say that the most important thing to do going forward after bankruptcy is to practice financial discipline, financial restraint, because the last thing that you want to do is fall into the same patterns that led you to bankruptcy in the first place. So that's, limiting your unnecessary spending, paying attention to your finances, to your checking account, what comes out of it on a monthly basis. You also have to be aware that after bankruptcy, it's very common that some predatory lenders will send you solicitation offers in the mail fairly soon after your bankruptcy filing. You'll start receiving those, and you have to have the discipline to not take those offers, because they're typically really, really high interest rate offers. And these creditors, they know that you just filed bankruptcy and were discharged, and therefore in most cases can't file bankruptcy again. And they can take advantage of that, knowing that they can reach out to you and try to collect from you if you do default on your payments. So you just have to be careful of those offers. They like I said, they do start coming very soon after you file. The other thing that you want to do is try to hold a steady job, and your employment history is such a big factor in what lenders and creditors look at when they're making credit decisions and evaluating credit applications in the future. Pay your bills on time going forward. You don't want to slip back even a little bit, because that starts rebuilding the same patterns that landed you in bankruptcy to begin with. Even if you fall just a week behind, yes, you might still be in a grace period that you're allowed, but it's changing your financial patterns and behaviors to avoid that. But like I said, not everybody files bankruptcy because of improper money management. So just generally speaking, for everybody, rebuilding a savings account, or if you didn't have a savings account before, really trying to put some money aside into a savings account so that you have money set aside for emergencies, or for rainy day when something happens. Your credit score obviously will have taken a hit initially with the bankruptcy, and that's going to take some time to rebuild. You can't expect that to just bounce back immediately. It takes a lot of work and time, but so you have to be patient with that process. One of the best things that you can do to start rebuilding your credit is look into secured credit card offers, where you give the creditor $500, and they hold that $500 as security or collateral for that credit card. And as you use the credit card and you make payments, it starts reporting on your credit report to rebuild your credit. And if you were to default, you have that secured money set aside that can be used to close the card, to pay down the card, so it secures you and it secures the creditor. And slowly over time, that will start to improve your credit score. The other thing I always say is, when something happens, especially if something happens that's unexpected and impacts you financially, reach out to your current creditors, to your current lenders, and talk to them about options and programs that they may have in place so that you can avoid bankruptcy, because a lot of creditors will be willing to work with you because bankruptcy is not in their best interest either. Typically, they end up suffering a loss as a result of your bankruptcy being discharged. So there's so many consumers in the same boat. Don't be embarrassed. Reach out to them and ask for help. Be proactive in everything that you do financially going forward from bankruptcy.
You know, Hillary, I want to go back to something you mentioned, and that is the credit card offers and the loan offers that are going to come in after you are discharged from bankruptcy, because it will happen. And it really is a play on your emotions, because I think people, you know, you tend to feel bad or embarrassed and you start getting these offers and it's like, well, I guess it wasn't that bad. I'll be different this time. I won't max it out this time. So you really have to be tuned in to really to your emotions when you start getting those offers.
Right. And especially if you don't have a savings account, you know, you might have been living off of your credit, your available credit for so long. And once you file bankruptcy, many lenders, especially if they're going to be taking a loss, they will close your credit line. So now here was your emergent, what you were using as emergency funds, it's not there anymore. And suddenly after you file bankruptcy, you start getting these offers for these small credit cards, $500 limit, $750 limit. And it's hard not to think to yourself, okay, well, I'll just open this one. I won't use it, but I'll have it and it'll be here just in case. And then you start using it because you think to yourself, a $20 a month payment isn't much, you know, and then another offer comes, another $20 a month payment isn't much, but those are the habits that inevitably likely led you to bankruptcy to begin with. So it's very hard to resist, because you're right, it is an emotional play. But then that's where the financial discipline needs to come into play.
And like you said, reach out to your financial institution, reach out to your lender if you find yourself kind of slipping back into those patterns, because they do have resources in place to help you.
Yes, absolutely. There's so many programs out there to help borrowers, especially those that are truly experiencing a financial hardship, whether that be workout loans or modifications, you know, lower interest rates, longer terms, lower payments, or temporary financial hardships might qualify you for a deferment where you can skip a few payments. There are absolutely programs out there that most lenders have to help you so that you don't find yourself back in this situation.
Excellent. Well, Hillary, thank you for once again hopping on. We appreciate it. These episodes are always some of our most popular because they do talk about things that people are dealing with every day. So we appreciate your time.
Of course, anytime.
All right. Take care. Thanks again.
Thank you.
Bye.